The outlook on this year's fuel price trajectory is mixed amid various global dynamics at play. The recent development is that a 37 cents a litre hike in petrol and a drop in diesel of between 48 cents and 74 cents were implemented this week. That's due to increasing crude oil prices, rising international produce prices of petrol, and decreases in illuminating paraffin for the diesel price drop. Senior F&B economist Koketso Mani joins us for this discussion. Thank you so much for your time, Koketso. I think to understand the price determinations of petrol, let's talk about what is encompassed when we talk of the complexities there.
Sure. Hi, Timitang, and hello to all of your viewers. So, yes, there is a bit of complexity when you think about the combination of factors that drive, the petrol price or the fuel price trends. We do know that the international fundamentals, so around the Brent crude oil price, international oil products, as well as the rand, do make up a chunk of what determines the fuel price in South Africa, what we pay at the pumps. That determines almost 60%, around 55% when we think about the main numbers. But there are other items that add to this price, or these international fundamentals. These include your levies and taxes, which make up about 30% of the price, and then the remainder is made up of your retail margins, so your other costs around distribution and so forth. So it is always important, though, to remember that these international fundamentals are the big drivers here, and what we've seen of late has been driving what we ended up getting in terms of the fuel price. You would remember that at the beginning of April, it did seem as though we would have a larger hike when you think about petrol prices. We've seen that narrow quite strongly. We've also seen the diesel over recovery lifting in line with what we're seeing with international product prices that have come lower during the course of April. The rand, unfortunately, has not been as supportive.
Now, let's also discuss how we've seen consecutive decreases, marginal, yes, but prior to that, we saw diesel not decreasing in the same manner that petrol was, and that has already turned on its head. There's a difference now with the latest fuel price adjustment for May, which came into effect just this week. The importance there becomes where we sit in terms of a South African public with the rising cost of living and what's to come, because the outlook going forward is not positive at all.
Sure. So the outlook is not extremely positive, simply because, China's recovery was meant to really support oil prices going into the second half of the year. We have started to see possibly a few constraints over there. When you think about the manufacturing activity data that came out earlier in the week, which showed that there may be some weaknesses in that sector, but we did already know that the recovery in China may not be broad-based, so that shouldn't be too surprising. Probably going to be more related to household spending, travel, and so forth. And so as that picks up steam in China, then we're likely going to see the oil prices supported. What's probably going to move the needle quite a lot is what's happening with the rand-dollar exchange rate. Where we are seeing that the Fed did hike once again by 25 basis points last night. That should be another factor that weighs on the rand, on top of local supply constraints around load shedding and so forth, and how much weaker that's probably going to bring the economy in 2023. We also have a current account that's moving into deficit. So all of these external vulnerabilities are lifting and are probably going to also weigh on the rand. But we are expecting that the Fed is probably close to its peak. There were indications yesterday at the communication from the meeting that they probably were probably reaching a pause quite quickly. And depending on how that economy performs in the second half of the year, we might actually see, policy becoming less tight as it currently is right now, and that might be something that supports risk assets such as the rand. So those international fundamentals, unfortunately, are very hard to pin down, and will be the driving force going forward. We did know from the national budget that there will not be any changes, though there were not any changes to the general fuel levy and road accident fund. So from the taxes and levy side, we shouldn't see too much changes going forward. So as I said to Nisang, primarily driving the fundamentals going forward is probably going to be what's happening in the global economy, oil demand, how OPEC responds to, a weaker economic environment, as well as fluctuations in the rand. So that should keep us quite busy, driving volatility in the fuel prices going forward. But the trend in general is tilted to the negative side for South African consumers.
Lastly, Koketso, to what extent does the price of fuel, petrol and diesel, have an impact on the current precarious economic climate that we find ourselves in? You think of goods, how they land up on our shelves is, of course, they would have been transported particularly by road because our ports have issues.
Precisely. So that is adding to the cost of living, unfortunately. And I mean, even if you think about the increases in prices, they're not as strong as what we've seen over 2022, where you remember petrol prices did peak, just above 26 rands. And that's when the government had to intervene to try and limit the impact on businesses and consumers. But we're probably not going to get to those levels again. So we still see that as the peak. So when it comes to probably the rate of price increases, when it comes to public transportation and so forth, you shouldn't see the magnitude of changes that we probably saw last year. But there is still upside pressure when you think about, when you go to the petrol station and fill up your tank. That's probably still something that's going to come up in the numbers and show a bit of constraint when it comes to the consumers. And you're terribly correct when you say it does also affect the distribution of goods and services. And that's also something that should come up in the numbers, keeping inflation slightly sticky. But you should remember, because I'm referring to last year's numbers, when you think about inflation and that change from last year, you're still likely to see on a year-on-year basis inflation coming off, particularly fuel or transport-related inflation. So that's just something to keep in mind. But we're terribly worried about when we think about the basket of consumer prices still remains food inflation and how that is still filtering through to other costs in the consumer basket.
Thank you as always for your contribution. Economist at FNB, Koketso Mani, talking to us about that near-term outlook on the fuel trajectory in South Africa.